welcome to Sectors Up Close. I'm Elena Casas. Our topic today is the Russian economy, and my guest is Marcelo Carvalho, the Global Head of Emerging Markets Research at BNP Paribas. Western sanctions may have a longer-term effect on the Russian economy, but their impact on the ruble has been less than permanent. After collapsing to around 120 to the dollar just after the invasion, the currency has recovered to roughly where it was a month ago. That's when Western allies froze the Russian central bank's foreign currency assets, banned key Russian banks and wealthy elites from hard currency transactions, and put restrictions on exports of advanced semiconductors and other technology. But since then, Russia has switched to asking for rubles in exchange for foreign gas payments. The local stock market is gradually reopening, and Moscow has, at least for now, made all its foreign currency bond payments. So, what is the outlook? For more, I'm now joined by Marcelo Carvalho of BNP Paribas. Marcelo, hi. So what impact of sanctions have we seen so far on the Russian economy, and what could we be set to see in the coming weeks?
We're seeing already quite important implications for the Russian economy, which has been suffering quite significantly under the new sanctions. We see, for instance, on the Russian streets, the fact that consumers are having a harder time in finding their products. Sentiment, not just for consumption, but also for investment, has been damaged for sure. So we're likely to see, we think, in coming weeks and quarters, negative real GDP growth, certainly the second quarter of this year, probably the third quarter as well. So for the year overall, we're contemplating a double-digit negative performance for real GDP growth. We're looking actually at minus 11% for growth in Russia this year.
So how's that playing through for the ordinary Russian? Are they seeing, for example, shortages of products as well as soaring prices?
It's starting to happen. We start to see those reports coming through, which is not surprisingly given the severity of the restrictions that have been imposed indeed. So indeed, it's a very challenging situation for the domestic economy, which has been increasingly being isolated from the global linkages it previously had.
As you've said, Russia has isolated itself bit by bit since sanctions began to be imposed after the takeover of Crimea in 2014. But it seems to be more resilient than we might have expected, with the ruble now returning to the same level that it was at a month ago. So why is the Russian economy resilient in this way?
Look, I think we need to differentiate between the Russian economy and the financial asset prices, which never go in a straight line. So look at the ruble, for instance, it depreciated significantly, has had some recovery. However, we have to take into account that the markets are not functioning properly or in normal conditions at all. So what we think is fair to say, however, is that given the macroeconomic environment, it's very likely that the Russian currency going forward is going to remain weaker for sure than it was before the sanctions were introduced.
And Russia is now insisting that countries pay for their oil and gas, which it continues to sell in rubles. The key customers here are China and India, aren't they? So how much ability do they have to keep supporting the Russian economy?
Look, the position of the Chinese and the Indian economy is delicate as well, because of course they do not want to be submitted to sanctions either. It is fair, however, to say that India, of course, suffers from the environment, being as it is a very important importer of energy, particularly oil. So the Indian economy will have certainly to adjust to higher global prices for energy. Likewise, China plays a very important role. China, however, does have, besides the global factors, its own domestic challenges. For instance, regarding the property sector difficulties or its own struggle on the COVID front. However, we do think that in the case of the Chinese economy, the policymakers do have very important policy instruments at their disposal to provide some cushion going forward and get the recovery in better footing in coming months and quarters.
What about the impact of this conflict on other emerging markets? Of course, we're seeing commodity prices, particularly for oil, but also for basic foodstuffs, go up all over the world. So how is that impacting other emerging markets?
We think we should look at this global reality as being a negative supply shock, which means that growth comes down and inflation goes up. globally, everywhere, including across emerging markets. Growth comes down because the trade channels are disrupted and also because of the impact on consumer confidence and business confidence. That's on growth, which comes down. On inflation that goes up, you have at least two important factors. You have energy prices that are going up globally for oil, for natural gas, but equally important, if not even more important, is food price inflation, which has an even larger role in the consumption basket of emerging markets. So food price inflation is here to stay because Russia and Ukraine are very important exporters of grains like wheat, but equally they're very important exporters of fertilizers. So food prices therefore are high today, but probably as well tomorrow.
Thanks so much for that, Marcelo Carvalho, Global Head of Emerging Markets Research at BNP Paribas. Well, before I go, here are some of the top stories in this space. The Russian Finance Ministry says it has fully repaid a coupon on the country's Eurobond due in 2035, its third payout since sanctions cast doubt on Moscow's ability to service foreign debt. The ministry said it made the $102 million coupon payout, and a source told Reuters the transaction was processed by the correspondent bank JP Morgan Chase. Payment in dollars is allowed. Russia's next payment is on March the 31st, when $447 million falls due, the biggest payment of the year, followed by a full repayment of principal of $2 billion on April the 4th. Meanwhile, Russia says it won't supply gas to Europe, quote, for free, while it works out methods for accepting payments in rubles. The central bank and Gazprom have until Thursday to present proposals for ruble gas payments to Russian President Vladimir Putin. But so far, leaders of the European Union and the G7 have rejected those demands, sending European wholesale gas prices sharply higher. And Russian airlines could be frozen out of the aircraft leasing market well beyond the Ukraine conflict due to defaults involving hundreds of Western-owned jets. That's according to one of the industry's biggest players. The world's second-largest leasing firm, Avalon, told Reuters that while its own risk is limited to 10 jets worth about $200 million, the leasing sector will be in no hurry to reset relations with Russia, even if sanctions are lifted. Global leasing players had until Monday to sever ties with Russian carriers under sanctions imposed on Moscow, but only a fraction of the more than 400 jets involved have been returned. Moscow earlier this month introduced a law allowing airlines to re-register leased planes locally in a move widely seen as encouraging Russian airlines not to return them. And that's your roundup of the Russian economy. I'm Elena Casas, and this is Reuters.